Hey there, this is Kevin Brierton, Certified Mortgage Planning Specialist. I was just talking to somebody about a Canadian option to finance a house in Arizona or other states, and this has come up a lot. So I want to go over this program with you. The highlights: you don't just have to be a Canadian to use it, but we just call it Canadian Mortgage Option because here in Arizona, we have a lot of Canadians that move here. I want to jump into this and give you a couple highlights. This is a really great program. Something that I'm just going to point out really quick. First, it's ideal for individuals who are outside the US and do not live or work in the United States. Now, they do have to have a valid visa, but is really for people that are not living or working in the United States. The qualification doesn't require a job, doesn't require income, traditional income, doesn't require credit. No citizenship required, down payment, US citizenship required. The down payment minimum is 25%. In most cases, there's options as well as pricing might improve if you put more money down. Depending on what you're doing, if it's a refinance, you'd have to put down at least 30% in most cases. Now, these interest rates are going to be slightly higher than your traditional interest rate, but keep in mind the process is going to be a little bit easier, and this has to be a investment property for these programs typically. So non-owner occupied properties, they will generally have prepayment penalties that are range between about 1 to 3 years. If you remove prepayment penalties from most of these programs that I've done research on, is your interest rates will be a little higher, or costs might be higher. So the balancing act of putting the right prepayment penalty on to reduce the upfront cost can be really effective to get the best deal. Most programs will go up to about $3 million for loan amounts. These programs are for 1 to 4 unit properties, so not commercial or 4+ units. And then most of these will have a 5 or 7 year ARMs and a 30-year fixed, with sometimes with interest only. Generally, the best pricing as of right now is 30-year fixed, but you do have some ARM options. It's always good to look at to see if that's beneficial. What's cool, what stands out about this program is you don't have to worry about things like condo-tels or short-term rentals because they're allowed. So most programs won't allow condo-tels or short-term rentals, but this program does, which is amazing. It's also allowable for the non-warrantable condos. So a little more flexible when it comes to condos or short-term rentals. And the way this program is qualified is they look at the rent roll or rent amounts in the area for long-term rental, and they will allow short-term rental, but there's a little more paperwork that's going to be involved in there. But generally what they're going to be looking at from the underwriting standpoint to qualify is the amount of rent that's coming in for that house on the market and what it looks like based on the monthly payment. So usually you're going to have to be 1-to-1. So if the rent is $10,000 a month and the payment's $10,000, that's the minimum. Sometimes depending on down payment, you put less down, you might have to have a higher percentage there. So its minimum is 1-to-1, but you might be a little bit higher. That is probably the number one thing to look at when looking for a program like this, is to make sure it's going to rent qualify. And if it doesn't, you just have to put more money down to drive the monthly payment down to be at the percentage the underwriter is going to look at. So minimum 100%, better to think like 125%. The rent needs to be 125% of the mortgage payment, all in, including taxes, insurance, HOA, principal and interest, all in. Generally, these programs, again, I mentioned no credit. Generally, they're going to need a letter of good standing with their current financial institution that will cover 2 years. So usually what we do is we get a letter from the current business bank or bank that they bank with for the client, and that would be really helpful. Now, some of these programs, what we found over the years is people try to want to close it in their business name. Well, generally, you're going to be closing it in your name, and then you can put it into the business name after the fact with the title company. That's usually the best way, because we try to go qualify under the entity, then that's a different qualifying subset. We would actually have to get business information and documentation, and really what we found is to serve the purpose, to make this easy for everybody and also efficient and get it closed, is to close it under this program, this Canadian mortgage option or foreign national program, also known as, is best to do it in the person's name, and then they can change that ownership after closing if they need to the business as they need to, if that's all correct. So thanks so much for watching. Just want to jump on and record this for you. Hope this helps out. If anybody's looking for national financing, Canadian financing, or if you're from any other country, let's talk. You can call us directly at 480-553-8770. You can also text me there too. Thanks again for watching. We'll catch you on the next one. Again, Kevin Brierton, Certified Mortgage Planning Specialist with the Kevin Brierton team. Have an awesome day. Thanks for watching. Bye.